TTF and the NBP markets are going nowhere right now, whereas German power and the EUAs are showing signs of bullish exhaustion, and we are getting ready for a significant drop. Hi, my name is Marcello Colax, I'm the Managing Director at Clever Markets, and today I'll walk you through the energy markets for the week starting 22nd of September 2025. Everything we are discussing here, of course, is not real trading advice. It is just my humble opinions and does not constitute an invitation to trading, and I'm making no claims that any of this will be working out. Okay, now we've got this out of the way. This is the TTF sentiment poll that we were confronted with at the start of this week. So we see that week on week it is nearly unchanged, and here we are asking between 150 to 200 European energy traders every single week where they think the market is most likely to go next. And we can see from one week to another, nothing has really changed all that much. And all of this is super reflective in the market as well, because here we can see that the TTF and the NBP and a little bit of the EUAs and the German power markets on the hourly charts, so that means the next couple of days, seems rather neutral. There is no clear direction, the market is going nowhere. Also, the TTF and NBP front month and front season products are neutral. They have been moving into increasingly tighter ranges, so this is perfectly aligned with the sentiment poll that is showing that the bulls and the bears are equally convinced and there is no dominant force in the market right now. Now, what are the markets actually doing? For that, we are consulting our charts here. So you can see the TTF and NBP front month, TTF and NBP front season, they have all been posting these triangles, and symmetrical triangles don't have a preferred breakout direction, and they could usually go, well, either direction. Now, in these small ranges, it is usually recommended to move onto the lower level time frames, like the hourly chart, for example, where we can actually still make use of the smaller swings for some intraday trading. For momentum traders or swing traders, anything like that, however you want to call it, I would remain neutral on the daily chart because there is no clear preference and we are simply waiting for the market to break either direction. So in a neutral market like this, I'm also starting to pay close attention to the fundamental news cycle. If we start seeing that we get like bullish or bearish news but the market is not pulling through, that's a good indication that the market is more likely to break into the other direction. So if you get bearish news and the market isn't doing anything, then the market is more likely to resolve higher eventually. Okay, now let's have a look at the EUAs and the German power market. So you can see both of them have been moving higher, but last week the up leg wasn't all that strong. Together with our proprietary algos, we get the idea that the bull trend has run its course, so the market is more likely to revert lower. So some traders might be looking for shorting opportunities in such a market. So here's the thing, never take an algo signal at face value, no matter if you build it yourself in-house or if you get this from a third party like Clever Markets. What we always want to see is the market actually move. So these algo signals, I mean, depending on what they are, but usually they are just additional filters. They tell us what to look out for. And right now I'm looking for the market to move lower. All right, Brent has been moving into an increasingly tighter range. We are seeing this here. We are making lower peaks. The troughs are stable, so the range is getting tighter. And we see that the Henry Hub has been moving in a tighter range. It is now resolving marginally lower. It's not so fast. So the next Clever Markets Technical Analysis Academy is launching on the 6th of October 2025. Join me, there's only a few weeks left. I had to open a second cohort because the first one sold out before I could even advertise it. Now I'm extending this offer to everyone who hasn't had the chance to join the first cohort. So if you want to be able to distinguish between corrections and reversals, if you want to spot fake outs, if you want to know when the trend is more likely to reverse or if you're going to continue higher, if you find it increasingly difficult to trade this volatility, then join the Technical Analysis Academy. It is a skill worth having in your trading career. You only need to do it once and you need to do it right. And most importantly, you don't have to do this alone. Get in touch with me if you want to learn more. And now back to the market. Alright, so let's get started with the TTF front month. I'm not going to talk about the weekly chart all that much. Nothing has really changed here. Yes, we do have like this big old downtrend, but we haven't moved lower since April 25, and over the past couple of months, like nothing has really happened. So let's go into the daily chart directly. So here once again, this is the symmetrical triangle that I was talking about that has shaped up within the descending channel, right? So descending channels are usually telling us that the market is going going down, but you can see that, oh, we started making higher troughs and we started making lower peaks, so that is a symmetrical triangle. And you can see the legs, both the up legs and the down legs, have been getting like really tight, so this is not the time frame for us to make any like short-term decisions, right? Can you imagine you try to go short here, we have one red candle and then you already have to get out essentially. So in the daily chart, no bueno. So for this, we move into the hourly chart. However, if we start pushing above 33.11 or below 31.62, then it would make sense for us to jump in on a broader trend, either higher or lower. So which direction is it going to go? Well, for now, we can't really tell, because in a sideways market, we don't want to look at momentum tools like the MACD here, because you can see that's just moving sideways. And by the way, the MACD moving higher towards zero in a sideways trend does not mean that the bulls are gaining momentum. It simply means that 12 and 26 exponential moving averages that the MACD consists of are simply getting closer together. So this here moving higher, the MACD moving higher in a sideways range, is not a bullish signal. It's just a sign that the 12 and 26 exponential moving averages are just flatlining. Okay, so don't use that tool. Also, you can see I use the 8 and 12 exponential moving averages. We don't want to look at them because you're not getting any signals. And look at this, I am looking at the DMI, the directional movement index, and within that tool that consists of 3 lines, I'm looking at the ADX, the average directional index. The white line is at 10, so 10 means the market is not currently trending. No surprise here. So overall, yeah, we are sideways and there is no preference. Now, usually in these sideways markets, we would start looking at oscillators because they help us trade the smaller swings, right? And here we are getting a bullish signal, bearish signal, maybe here bullish signal, there a bearish signal. And this was all really nice. You can see here a bullish signal at the trough, maybe a bearish signal in the peak, right? A bullish signal here in the trough. So this was all really nice as the market was still trending lower. But as we are moving in this super tight range, even the oscillator is not giving us any signals right now. We are just moving sideways. So what do? Hourly chart, exactly. And you can see here we have this rectangle established, and zooming out further we can see this here is the triangle that I'm talking about on the daily chart. And isn't that much nicer to trade, because now we are actually dealing with a flow of higher highs and higher lows. We are starting to deal with a flow of lower lows and lower highs. We start seeing that the MACD is making real moves, higher highs and higher lows, lower lows and lower highs. So very different to the daily chart that seems almost like unpredictable right now, right? So that's why hourly chart is the better deal right now. Okay, so now we have a rectangle question mark because we don't have that many hits yet. You can see we have a peak and a trough and maybe another peak here or there, so maybe another trough there. So this rectangle, we are not fully convinced by that, but if we start moving below 32.15 this morning, then, which is our preferred scenario by the way, then the market is more likely to bounce off 31.62 before we continue a little bit more sideways. Why do we think that the market is going to continue lower? Well, because of all the signals that are given to us. Can you see this? We start seeing that the 8 and 12 exponential moving averages are both tilting lower, and we can see that as they're moving lower, the 8 started to move below the 26, so that means it's super bearish. So that means it's more bearish in the very near term than in just the near term. Here this is called a death cross. Ooh, quite spooky. Okay, so now we do have the oscillator, the MACD here, which is our momentum tool that is also giving us a bearish signal. We see that the stochastic gave us a bearish signal right at the peak, right? Kind of nice. Bearish signal here, bearish signal there. And we are not yet getting any bullish signal. Remember, on an oscillator, the bullish signal would only be given if we start moving above the oversold territory. Didn't happen yet. So for now, the market could potentially continue lower. Now, of course, I am not blind to this bullish Harami candle that we ended the week at. So a bullish Harami simply means that we have a big red candle in alignment with the preceding trend. Okay, cool. Then we have a smaller candle that is green candle that is fully engulfed by the preceding red candle. That's also the case. And chances of this pattern working out are higher if we get high volume. And we did get some high volume. But now here's the thing. this did not happen at a super important support level. There is some, cool, but it's not that important. And also, we didn't really get a bullish signal on the stochastic. And also, even if we were to bounce higher this morning, on Monday morning, the bullish signal would only be confirmed with a move above the candle, which is 32.46. Only here the bulls would be confirmed in moving higher. And even if we get a move higher, then ultimately the downtrend is more likely to continue eventually, because trend and momentum tools are still firmly bearish. So with or without a bullish open this morning, the bears are more likely to continue later on, possibly towards 31.62 before bouncing a little bit. You can see our alternative case is simply bearish continuation. And we can see how these two scenarios on the hourly chart map into the daily chart, right? If we go lower and bounce, then the daily chart will simply continue sideways, which is our preferred scenario. If we start breaking below this trough on the hourly chart, 31.62, then this entire triangle on the daily chart is more likely to resolve lower. So then also our preferred scenario will then eventually play out, but a little bit sooner than expected. So that's it for the TTF front month. If you do have any questions, just reach out and let me know. Everyone, you stay safe in the markets. You're awesome. See you around, and bye bye.